Hi all, and welcome to this webinar on emergency funding for businesses. My name is John Keimig, and I'm the director of the Family Business Center here at the University of St. Thomas. I'm joined by my colleague in the Schultz School of Entrepreneurship, Beth Bagley, who will be assisting with the technical side of the event and stepping in if needed. These webinars are a joint effort of the University of St. Thomas, Schultz School of Entrepreneurship, Family Business Center, and Small Business Development Center. This is the first in a growing series we are creating to bring you up-to-date information to help you navigate business in this new uncertain time of the coronavirus. Before we begin, we are recording this webinar and we'll post it on a website our team is currently creating that will be a hub of business resources. We will send that link out in future emails. A quick orientation to Zoom webinar. So we had a Zoom meeting set up until 225 people registered, and we realized we couldn't host it in that format. So we are using something called Zoom webinar. So thanks for hopping in here. All attendees are muted. However, your participation is really important and is the sole reason we are convening. So we invite you to click on the Q&A button at the bottom of your screen to pose questions or add a comment at any point in the presentation. We will compile questions to ask the presenters at the conclusion of their presentation. With 200 people on this webinar, we won't be able to go through individual company-specific issues during the event, but we'll give you contact information at the end to reach out to our presenters who can help you one-on-one. Like I mentioned, this is our first webinar. We've tested multiple times in the last 2 days, but issues might come up with internet speed, children waking up from naps and not working on the listening that we've been talking about. So thanks for your understanding of that, and please bear with us if any of those technical issues do arise. Now I'm going to turn it over to my colleague, the director of the Small Business Development Center, Mr. Mike Ryan. Mike.
Thank you, John. Good afternoon, everybody. Thanks for joining us to discuss the new Small Business Administration Economic Injury Disaster Loan Program. My name is Mike Ryan, as John said, and I'm being joined today by my associate, Diane Patterson. We are from the University of St. Thomas's Small Business Development Center. Just to be clear, many people do get this confused. We are not with the SBA. The SBA is a federal agency, the United States Small Business Administration. Now, they do sponsor the loans, but we are not part of the SBA. We're just a partner. We have been at the University of St. Thomas since 1981. So before we get started, I'd like to take a few minutes and just familiarize you with the Small Business Development Center at St. Thomas and let you know up front that whatever you see in this program, we are here to assist you at no cost. There's no charge to you whatsoever. If you choose to go ahead with this loan program, we are here to assist you at no cost. Also, as John mentioned, please save any questions till the end. We'd be happy to answer if we can. If you prefer, of course, we will also answer these offline and be available to meet with you, probably remotely. I don't see any face-to-face meetings coming up in the very near time. And a final note, with all the crazy legislation that's going on right now, just wanted to make a note that the Economic Injury Development Loan Program, sometimes we'll refer to that as EIDL, is not the loan program that's included in the federal legislation that's passing right now. That is a completely different program. Those are loans through banks for payroll. It's not settled. So that is not the loan we're talking about. It is not also the loan from the state. Minnesota has been publicizing some loans from the Department of Employment and Economic Development, as we call DEED. This is not a DEED loan either. Both of those programs, the new federal legislation and the DEED program, they're still not fixed. There are moving parts. We don't know all the details. Although, John, just to make a note to John, that might be a topic for another webinar. As these details get sorted out in the next couple of weeks. So could we have the next slide, please? So just a few moments to tell you about the Small Business Development Center. The Small Business Development Center, I mentioned earlier, has been at St. Thomas since 1981. It's part of a nationwide program. We have centers in every state, and it's a partnership between universities, typically colleges of business like St. Thomas, and the SBA. There are 9 centers in the state of Minnesota, with St. Thomas being the center that covers the metro area. Typically, our clients will be in the 7-county metro area. So for those of you who are in that area, we are your go-to, your default center. Although we don't have big boundaries, if you're seeing us from some other location other than the 7-county metro, we'd be happy to help. It's not an issue whatsoever. But what we do primarily is the SBDC provides free and confidential advising to small business owners. We consult really in really all topics of business, marketing, finance, accounting, access to capital, which this particular webinar is about. In fact, access to capital is one of the things we do the most. Since I've been with the center, geez, nearly 20 years, I think our center has helped raise almost $100 million in capital for small businesses. That tends to be loans. We don't do a lot of equity investments, but we do a lot of small business loans. We don't make the loan, of course. We just assist the clients with getting there. Again, this is at no charge to the client. So we serve about 300 businesses a year. It's really a natural fit to be at St. Thomas for all this time. St. Thomas being the kind of the go-to place for entrepreneurship. So we create really hundreds and thousands of business connections with the university. And the SBA, you might be wondering why the SBA funds us to provide this free service. Well, they hope, and they're generally correct, that the small businesses grow and pay taxes. And then they hire people that also pay taxes. So that's really the purpose of our center here. And just again, want to welcome you to this. If you choose to move ahead with this loan program, we would be happy to help, and John will provide the contact information at the end of this presentation. And now I'd like to pass this over to Diane Patterson, my colleague at the Small Business Development Center. And I think she will tell you a little more of the detail on this loan program.
Thank you, Mike. This loan program came about based upon a request from Governor Tim Walz to ask the Small Business Administration to offer these low-interest federal disaster loans for working capital to Minnesota small businesses suffering substantial economic injury as a result of the coronavirus. Next slide, please. Some of the program details. Eligible entities may borrow up to $2 million. The interest rate for these disasters is 3.75% for small businesses and 2.75% for nonprofit organizations. Terms are up to 30 years with no prepayment penalties. There is also no cost to apply, and there is a 12-month deferral from the closing date of your loan for the first payment. The economic injury disaster loans over $25,000 will require collateral. Anything $25,000 and below is unsecured. The primary collateral that the SBA is looking for would be real estate. The SBA EIDL funds come directly from the U.S. Treasury. So unlike other SBA loan programs that you might have had access to, the applicants do not go through a bank to apply. They apply directly to the SBA's Disaster Assistance Program at disasterloan.sba.gov. What I am hearing from small businesses currently is that the SBA Disaster Loan Program has been inundated with applications. So the recommendation is, if you can, apply during off hours. I heard one business was applying at 2 in the morning. Not exactly convenient, but they got through. Also, because the portal sometimes comes down, the recommendation is also during your application process, save your information and save often so that if it does go down, your information remains. Next slide. And I'm going to turn it over to Mike.
Thank you. This loan, this EIDL loan, is a little different than your traditional bank loan that you might be familiar with, in that the SBA determines the loan amount and the term. A loan, most of the times, is if you're familiar with the loan process, you'll go in and apply for a particular amount of cash, and you negotiate these things. But in this case, the SBA is going to determine the loan amount and the term. And as Diane mentioned, this is also a little different because this is lending directly from the Treasury and not from a bank. But because they determine the loan amount does not mean that we can't make our case. And this is really where I'd like to talk to you about what we can help you do, or at least give you some advice if you're putting together your own application. Doesn't mean we can't make the case for asking for how much we want and what the term of the loan might be. So the point of this loan, the stated purpose by the SBA, the stated purpose is to replace, and this is could be a little confusing, but the stated purpose is to replace the lost revenue due to this virus to keep you in business, meaning to break even. It is not meant to replace all of the revenue that you've had, meaning that if you were running at a profit, we can get a loan to replace the expenses that you're going to incur, but not necessarily the extra revenue that ultimately became profitable. For example, if you're running, so let's see, this loan goes up to $2 million. So if you were running on a monthly revenue of about $100,000 profitably, but you need $80,000 to break even on a monthly basis, the loan is to get you back to replace that lost revenue back to 80,000, not 100,000. So, but also we want to make sure that we determine that you're using the correct expenses. This is where it gets a bit complex, and again, we'd be happy to help. In determining the break-even point, we want to make sure we include all the allowable expenses that the SBA is allowing you to take. We want to make sure we capture all allowable expenses. They're allowing debt payments, they're allowing payroll to be as an expense, including the owner's payroll. You are expected to take a reasonable salary as well. Rent payments, accounts payable, really any other operating expense is allowable in determining this break-even point and thus the amount of the loan. One thing they do not allow is refinancing of debt. So you can get this loan, there is no prepayment, you can repay it, you can pay it back, but you cannot refinance existing debts with this loan. The other piece in estimating the amount of loan is how long do we think this disaster is going to last? Nobody knows, but I sat through a number of these webinars with the SBA and heard an interesting term which tells me something. The term from the SBA is that we are looking at, quote, looking at a 6-month disaster period. Well, that tells me this isn't really settled. So what my suggestion would be, we need to determine how long this disaster will last. If they're looking at a 6-month disaster period, my thought would be to go in there and estimate this break-even revenue that we need for 12 months. It's, in my opinion, I think Diane and I have talked over this a little bit as well. We think you're much better off asking for too much and not getting it rather than asking for too little and not making it. I mean, and then in fact going into a default. So the point is, I guess my advice would be to apply for as much as you think you can get over the longest period of a disaster you think there may be. And they may come back with something less. And the bottom line is you don't have to take it. It's a nice program. It can be a long term. It's a low interest. But if it's not something that you're comfortable with, you don't have to take it. And again, be happy to talk that through. The other side of the loan, which I'd like to mention, is this, and I think Diane had this in her portion. This is up to 30 years in term, which is really a fantastic opportunity. So the SBA is going to look at what your business looked like pre-disaster, and it's going to look at your profitability and determine from there how much cushion, quote, cushion you have to repay this loan once you're back on your feet. In the application, what I would suggest, they don't give you a lot of room in the application to make your case for what you're asking for, but there's a small portion, and I would make a very strong case that you you would like to extend this term as long as possible. You can always repay the loan early with no prepayment penalty, but extending that term makes all the difference in the world to a small business. The interest rate is very low at 3.75%, but the term is everything. Just to give you an example, for those of you who don't have a financial calculator at your side, if you were to take a $500,000 disaster loan and pay that back over a 30-year term, and we would make a case that you need 30 years to pay this off, your monthly payment would be about $2,300 a month. If you were to take the same $500,000 loan at 10 years, your monthly payment is about $5,000 a month. So my recommendation would be, when we have this case to make our claim for how much we're asking for and how long to pay it back, I would make a strong case estimating on the high side and the long side. So again, when we look at each of your individual situations, we'd be happy to give you our advice. We're not privy to the inside workings of the SBA, but we've worked with them long enough. I think we have a pretty good sense of their logic when they're thinking through these applications. So that's kind of the process of going through determining how much loan to ask for. I guess I would like to turn it over now to Diane to talk about who might be eligible for the loan.
So the applicant must have physical presence in Minnesota. The applicant's economic presence via e-commerce or other supply chain alone in Minnesota does not meet the requirement. The applicant must also show substantial economic injury directly or indirectly as a result of the coronavirus. This is going to be particularly important. And Mike will talk more in detail about some of the forms, but the only form in the entire application process that really allows you to make your case is Form 1368. And that is going to be key for businesses to really show that they have been injured by this disaster. Some businesses that can show injury are the ones directly affected by the disaster, but also businesses that offer services directly related to businesses in the declaration. Other businesses indirectly related to the industry that are likely to be harmed by losses to their community. So those are just some examples of businesses that can show substantial economic injury. Ineligible businesses, though, include the agricultural enterprises. By law, they are covered under the USDA. Religious organizations, charitable organizations, gambling and casinos and racetracks. So those would be a couple of the businesses that have been deemed ineligible for the EIDL loan program. A couple other eligibility requirements. The applicant's business must meet the requirement of the SBA's definition of small business. That is on the SBA's website, but that primarily or overall is businesses 500 employees or less. The applicant's business has a minimum of 1 year operating history. Yesterday I was on a webinar with the SBA and an interesting question came up. And the question was that the business owner had purchased an existing business less than a year ago, but the business they purchased was well over a year old and operating. Could they apply for this loan? The recommendation by the SBA was yes, indeed, use the financial statements that you had from the business that you purchased and go forward with the application. The applicant also has to have what the SBA is calling an acceptable credit score. Mike and I have asked specifically, what does that look like? And we do not have an answer. So what the SBA is deeming acceptable at this moment, we do not know. One of the biggest eligibility criteria is that the applicant can show ability to repay the loan after the 12-month deferral period. That too will be part of the 1368, Form 1368. These are not forgivable loans, and the SBA wants to be assured that the applicant will be able to repay the loan. The applicant will also personally guarantee the loan, and if there's more than one owner, all applicants will need to personally guarantee the loan, and the applicant will have to provide collateral for loans over $25,000. And like I mentioned earlier, the preference for collateral, according to the SBA, would be real estate if it's available. If loans will not be denied for lack of collateral, it just may mean that the loan will have to, the applicant would go for the $25,000 or less. I will turn that over to Mike.
All right, thank you. The next slide, please. Oh, I got it. Never mind. You got it. Just to go over finally the application process. This being a government program, of course, there's multiple forms to fill out. That's just the way that is. Don't turn the slide, but the following slide will give you a list of those forms in a moment. We don't need to go into a great deal of evidence. No, don't need to show all of the forms. But so while it's a bit of an exercise, we're looking at probably 6 forms to fill out. There's no cost to fill it out, just your time and aggravation. And at the end of this, if the terms aren't to your liking, you don't have to take it. Nevertheless, it is a inexpensive long-term loan, which could be pretty helpful. Again, it is non-forgivable, as Diane mentioned. Other than some of the other loans that we're here talked about, I don't have any more details on those. But so for the first step, what I would suggest, if you're thinking of applying for a disaster loan, the first thing I would like to look at with you, or think about it yourself, do the easy stuff before you start filling out pages of forms. Make sure you can identify that you actually have evidence of your injury due to this virus, injury direct or indirect. You need to have pre-disaster cash flow. You need to be profitable. You need to show that once you're back on your feet, you can repay the loan that you're asking for. And you have to have what we talked about is an acceptable credit score. Again, I don't know what that is, but before going through a long exercise of filling out the forms, let's check those ones off first. We have a pretty good idea what's going to qualify. We have a number of businesses that come to us that are startups or that have never made money. I have no real profitable history. That's just not gonna work, and there's no sense in going through a lot of filling out a lot of forms. If it looks like you're eligible, we'd be happy to help with the next steps, and that is really, I think we talked about, or Diane talked about, the forms 1368. That's really where we make our case for the business. What are the losses? How long are these losses going to go on? Complete the rest of the paperwork, and what I would recommend, because it is difficult online, you know, with the heavy demand. What I would recommend is going online or downloading the paper applications. Fill out the paper applications and have them at your side when you do go online to do the input. It is possible to submit these on paper, but I've been told it takes quite a bit longer. And then all that does is they collect the paper in Dallas and hire people to key in the data online. So we're just asking for transcription problems there. So I would suggest take a stab at completing the paper application and then trying to put it online. The turnaround time on this, of course, being brand new, we don't really know. But the target for approval, the SBA is telling us, is a 3-week approval target. To that, I would think you probably want to add a couple of weeks for the disbursements and getting the closing documents ready. So at the very least, even from the moment this is submitted, you're probably looking at 5 or 6 weeks to get this in your hands. So if you want to go to the next slide, please. I think Beth said she got that sorted out. So this is just this is more than you need to know, but it does give you a sense of all of the forms that you do need to fill out. Again, not going to spend a lot of time on that, but I would say you need to set aside several hours if you're going to do this. The other things that are not part of these forms that they will ask for are tax returns. They do ask for a IRS form that allows them to look at your tax returns. And these are tax returns not just from the principal owner, but if there's any, I believe this is the case, if they're 20% owners in any of these businesses. So partners in the business, anybody that's involved in ownership of the business will really have to submit personal financial history, credit scores, tax returns, things like that. Some of the documentation requirements will vary slightly depending on the amount of the loan. I'm not sure of all of that, but in any case, you'll need to set aside a good several hours to probably pull all of this together.
Mike, can I add to that?
Of course.
On the webinar yesterday with the SBA, right now they're thinking that they won't have you upload tax returns for loans under 500,000. I think that's because they've been inundated. They've changed some of the requirements. So at this time, and again, it could very well change in the near future, loans under 500,000 will not require the 3 years of tax returns at this time. They could ask for them throughout the application process, but initially they're not asking for them.
All right, thank you. And that's really, that's all I had to kind of wrap up this, the summary of this loan program. So I think with that, we would be open to any questions you might have for us.
Sure, and I've got some questions that have come in and have been monitoring those and answering as I could, but I will propose a couple of them to you from the audience. Is there a cap on the loan amount? We talked about that as being $2 million. If the disaster length is determined to be greater than 6 months, could the maximum available loan amount increase? Have you guys heard anything about an increase there?
I have not. There might be increases in that 6-month disaster timeline, but at this time I have not seen any talk about raising the $2 million cap.
Okay. Also, a couple questions about real estate as being collateral. Some folks don't have real estate as collateral. Is there anything else needed for loans over $25,000 that you guys have heard about that we can share with this audience?
I do know that the real estate is their preferred collateral, but I've also been told they will not turn down a loan for lack of collateral. Kind of a curious statement, but they would like real estate, but that won't stop them if the other pieces of loan are okay.
The other potential collateral would be large business assets. Sometimes the SBA will take that as collateral as well.
Do you need to exhaust all other forms of borrowing before applying? Example, credit lines.
No. My understanding was that even if you had credit available elsewhere, that would not preclude you from successfully applying for this loan. It's just that they cannot be consolidated. You can already have a disaster loan with the SBA, and you can still apply for this economic injury disaster loan program, but they cannot be consolidated.
The other thing that I have heard about is not looking at other loans, but you do have to take into account if you have any business interruption insurance to mitigate your losses.
If somebody already has an SBA loan, can they still do this program?
Absolutely. But again, they cannot be consolidated. They would be treated as 2 separate loans.
Is the debt transferable? I'm in the process of transferring ownership. Would this disqualify us?
I have not heard anything regarding that through the SBA. It would be something that I would definitely look into. Other SBA loans are sometimes transferable, but this particular one being so unique, I don't know.
Does percentage of ownership play a role in the personally guaranteed aspect of these loans, or do even minor shareholders need to personally guarantee?
The rule for the SBA is anybody that's a 20% owner or greater has to guarantee.
A question about when we'll have more information on the relief coming as a result of today's legislation. We will need to wait until that is digested more fully before we bring those resources. Once we get them, we will post them to a website link that is being created to house this presentation and this PowerPoint. A lot of you are asking about that. Yes, we will get these posted as soon as we can. And once we get more up-to-date information on what's happening at the federal level today, we will get that posted as well. Is there a date by which you would recommend submitting an application?
I'm hearing sooner than later, but that there is enough funding, so do not panic that they're going to run out of money.
Do you think it would be easier to get the emergency loan from the state if one needs less than the $25,000?
What the state is telling us is that they won't consider, and Diane, maybe you can correct me, but I think this is what I heard. They won't consider a state loan unless they have first applied for the federal disaster loan.
That was my understanding, that the state was encouraging you to apply for both.
What would be substantial economic injury? Do you think a 10% decline in revenues would be sufficient? The new CARES Act requires a 50% drop quarter to quarter. I'm wondering if this program would have a similar standard.
I have not seen a raw percentage as to what is substantial. My guess is 10%, probably not. What do you think, Mike?
Yeah, I have not heard any guidelines. 10% doesn't seem, it seems like normal, almost normal fluctuations. But, you know, I think with this, the SBA's position is their inclination is to approve requests. And they also say, when in doubt, apply. So I would go, if you think it's worth spending the time to do that, then by all means.
The other thing that is different than normal SBA loans is that if you are denied your loan application, you have 2 opportunities within the next 6 months of your denial to remake your case. So that tells me too that you know, if it's 10% today, but 3 months from now it's 30%, they're really saying they will reconsider loan applications at least twice.
Does it have to be unsecured collateral? We have a machine shop machinery being used as collateral for another capital equipment term note with our bank. Can we use the same machinery as collateral for this loan?
Generally speaking, the SBA is not fond of being in second position. But I did hear from an SBA representative yesterday that in a different case, they were willing to take second position, so I would still apply.
A couple questions about entities where everyone owns less than 20% on the collateral, the personal guarantee.
I don't really have an opinion on that. I imagine the SBA comes across this situation often. I've seen a number of businesses where you see many 19% owners. I'm not sure how they address that, but I'm afraid I don't have any good advice, but we could look into that further.
Absolutely.
What if the business has 1 or 2 outstanding 941 payments?
Good question.
Okay. See, I'm scrolling through some of these here. As a single member LLC, my company is a disregarded entity, so business income flows through personal tax returns. That disqualifies people.
What the disaster loan is in place is to help you make your monthly payments to stay open. The difficulty with some one-member LLCs is that your monthly expenses are minimal. And so that would be hard to prove that you couldn't stay open because of of the coronavirus. I've gotten those questions from anywhere from hairstylists who rent their chairs and other gig type jobs, but it's just going to be that much more difficult to prove substantial injury.
Do I have to use their specific forms? I made a spreadsheet of our monthly sales. Could I use that instead?
I think the language is on the 1368. That is the SBA form. They I think they offer you the option of using your own. I would recommend not doing that. It's a pretty simple. If you can transcribe, they're really not looking for a whole spreadsheets full of data. You may want to attach your spreadsheet, but I would recommend using the forms and making it as easy for them and normal for them to review as possible.
For an early stage company operating more than 1 year, but not yet cash flow positive, so quite a few startups out there, how does this work for them?
It's probably going to be difficult in that you're having to show the SBA that you will pay them back after the deferral period. And if you haven't been cash flowing up to this point, showing that repayment requirement may prove difficult.
Can the building's LLC provide the equity to the tenant when ownership is linked? So for a family business that owns different entities, the company and the property.
I would think so, because that would also come under the personal guarantee.
Another one piggybacking on that, the second generation of our family business owns and runs the company, but the founders own the property. We pay rent to the founders. Is there any way to use the property as collateral even if the current owners or business does not technically own it?
I would think that in that case, the owners of the equity would have to guarantee the loan. Is that what you think?
I would think so too, because you're using the disaster loan funds to pay the rent to the other entity. And so in order to, because there's no ownership, you couldn't pledge that. So yes, I would agree with Mike that the owners of the building would have to be guarantors as well.
I submitted an application. It's in the process. We realize there's a typo in the owner's name. What should we do?
It will probably get kicked back, and then you'll have to correct it. The SBA is telling us that that is the #1 reason for delays in applications, is that there's been an error. And they gave the example that the individual wrote Bill on the application, but according to their tax records, he's William, and it'll get kicked back.
Sure. Someone says they're stuck on the online application because it requires either a sole proprietor or 20% owners listed, but you cannot answer no to both questions online. We have neither of those. Is the paper application different?
My question is, which form were they using? Are you using the 5C, which is for sole proprietorships, or the Form 5, which is the overall or overarching application?
If we successfully borrow funds and end up not needing the entire amount, do we simply not draw down the entire amount or do an early payment to reduce the loan amount? I'm wondering, as I'd prefer to pay off higher interest loans if we end up weathering this more effectively than planned, but you said that's not what this loan is for.
Right. If you don't need the amounts that you apply for, it's not a drawdown type of loan. It's a lump sum, from my understanding. You would just take less. So if you're understanding, if the SBA, like Mike said, determines the amount in the term and they determine an amount higher than you feel that you need, you do not need to take the entire loan amount.
Couple final questions here. Seasonable profitability affects the decisions in the resort area, and it's normally slow now, and travel bans will keep future income suppressed. We lose money normally January to April and make it back in the summer. Is there any effect there?
I would think that the resort, that would be really a perfect example of, you could demonstrate injury. And yes, even though the spring and the winter may be slow, if it's clearly seasonal, and I think it wouldn't be a difficult case to make to get a loan to cover that summer season.
What considerations go into deciding the term of the loan?
I think that would go back to, they're going to look at, if you're in full operation as you have been, how much excess cash do you have available for debt service? And that's where I would try to make the case to argue that not all that excess cash is available, and you need a longer term. They may not buy it, but I think that's what they're going to look for. If you can use some other language or some other mitigating circumstances that you really do need your 20 years or 30 years instead of 10, I would make that case.
Okay, last question, and then we will give you guys information about our next webinar, which we have in process to be scheduled here. As a small business owner, I'm primarily paid by shareholder distributions. I do get a small salary. Without any profit income or profit, I cannot get paid. Would this be taken into account?
That one's a...
I don't know.
I don't know.
I don't know. We'd probably want to talk with your CPA. There's some tax issues and things in here, but I'm afraid I don't know that offhand.
Okay. Always a good idea to work with the advisors you already have in addition to the Small Business Development Center. We are going to wrap this up with a little bit of information about what to do next. The Small Business Development Center, easiest way to get a hold of them is smallbusiness@stthomas.edu. That is not on the screen in front of you, but one word, smallbusiness@stthomas.edu. Again, smallbusiness@stthomas.edu. Additionally, on Tuesday, we are scheduling a webinar on HR policies and practice during crisis. We've had an awful lot of questions come from business owners on those issues with layoffs, furloughs, you name it. There are a ton of issues that business owners are dealing with in regards to their employees. So Ron Linneman from the WA Group, he's an employee benefits consultant. He will be addressing that issue for us. And then we will do a business owner panel where different local businesses are going to be sharing some of their wins. What is working in the business, and how can other companies learn from this and apply it to their own businesses? If you have a need or an idea for more topics as we continue to develop these webinars, email us at the schultzschool@stthomas.edu. That is on your screen there, schultzschool@stthomas.edu. I'd like to thank the Schultz School of Entrepreneurship, the Small Business Development Center, Mike and Diane for spending so much time prepping this webinar, and the Family Business Center for the combined effort to put these on. We look forward to connecting with you all in our future webinars. We will let you know when this information is posted online and send you a link to that and get you information on future webinars. If you did not receive an email for this one, please email us at schultzschool@stthomas.edu and we will get you into that email list. Thank you, good luck, stay healthy, and look forward to talking with you soon.